Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. It's the 17th of April, and our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, and he's coming to us out of Singapore. Now, Vishnu, it's always great to have you on the show.
Thanks, Brian. Very good to start the Monday with you as always. It's a great start.
Yes, it's a really good start. But first thing I'm going to ask you, Monetary Authority of Singapore paused its hikes last week. What should we be reading into this, and what will be the impact then across the region, particularly around the expectations of the Fed?
That's a really good question, and I think the MAS made it quite easy for us. I mean, so our baseline expectation was for a hold, but we did concede that it's becoming it was becoming a split view, with many thinking that the MAS would have tightened one more time, maybe potentially buffering against the oil price shock and things like that. But the MAS made it very clear, not much between the lines reading to do, because they quite expressly cited intensifying risks to growth. So they've come out to say, a lot of the policy action they've taken so far, and let's bear in mind that the last 5 policy meetings, 2 unscheduled, the 3 scheduled ones, were all tightening, fairly significant tightening. And they said, with what they've done so far, and the fact that they are intensifying risks to growth, it is apt for them to stand pat and assess the situation now. So it does sound like, pretty much what's been done ought to take care of the pipeline price pressures, which ought to continue fading in the absence of any unexpected shocks. And they think that the policy is well suited to already dampen inflation, whereas the downside risk to growth is where they see a lot of uncertainty around. It's hard to read. There are two-way risks there. But all said, I think for the MAS, which tends to be a lot more hawkish against inflation pressures, this speaks volumes of the uncertainty around the global demand environment. And to take you up on that question as how it feeds into the Fed, that's where the Fed pivot bets. We can use another P word here, and that's polarization. There's a polarized views. So early last week, we saw yields falling, dollar falling. The bet was the Fed's going to pause sooner rather than later. But on Friday, there's a bit of a jolt on two things. One is data came out firmer than expected. Michigan sentiments, as well as core retail sales, came out stronger. And then the Fed also, we had Fed's Waller. He's a known hawk, but for him to come out and say that financial conditions have not tightened significantly, and that more tightening is required, I think jolted markets. Those who were betting that the Fed is going to pause almost imminently have taken a step back. And I think what really weighs on their minds is that despite the uncertainty to growth, which the MAS has pointed out, you could continue to have a hawkish Fed. How that plays out for us in the EM is that there's going to be a lot of more volatility. The ability to bet on a one-way decline in the dollar and hence a corresponding rise in EM Asia currencies is going to become tougher. Risk premiums could also rise because of the uncertainty. So that's really going to create a lot more turbulence and headwinds around asset prices as well as outlook for the region. Speaking of which, China GDP, I think people are expecting the numbers to accelerate. That's from a very low base. I mean, let's recall that in Q4, exactly. China's GDP came in really weak, right? Sub 3%. Expectations are for 4%. I think the celebration there is quite hollow. What we really need to look out for is underlying momentum, which could remain somewhat fraught, because one thing to bear in mind is that Q1 is going to be flattered anyway, not just from a low base, but it's going to be flattered by the reopening as well as all the stimulus unleashed. So the real question for markets would be how durable and how strong the underlying momentum is.
Now, looking ahead to the rest of the week, what should we be watching out for? Some markets will be obviously tapering down because of the end of Ramadan and the start of Hari Raya festivities. What are key data points and events that could potentially move markets this week?
I mean, that's certainly something to really space out and see what we need to watch out for earlier in the week. So a lot of things that's coming out earlier in the week would be China's GDP tomorrow. You've got the ECB's minutes to their March meeting. Why that's important to look out for is for those who are hunting for hawkish cues there. They may want to drive the euro higher, the dollar lower. So it may look like a bit of a risk on, but you want to warn that this may be just position adjustments ahead of the the long weekend that you alluded to. Bank Indonesia is going to meet widespread expectations. Almost universal expectations are for Bank Indonesia to stay on hold. So a lot of what's going to happen this week would be in the absence of major US data. Of course, they're going to look at things like the GDP, advanced results coming out, so on and so forth. But at the end of the day, the big tussle here is going to be between whether the Fed continues to retain a hawkish incline or not. As you were suggesting earlier, for US Treasury Secretary Janet Yellen to come out and say, the banking wobbles and weakness means that they may not need to hike as much.
Yes.
I think there's going to be a lot of debate around that, Brian, because clearly the Fed is split. Waller has come out to say almost pointedly to Yellen's remark that, yes, it may tighten, credit conditions can tighten, but he said they have not tightened significantly. So he's saying that's not enough. So one of the things markets may want to do would have a habit of doing is saying all this banking sector uncertainty and the resultant credit tightening, how many basis point of tightening does that equate to? The early estimates around it suggest that, and Fed Powell also implicitly suggests that it's about the ballpark of 25 basis points. So the risk that we need to keep in view, if that's in fact accurate enough, is if there are further banking sector wobbles and that credit tightening turns out to be a lot harsher, say somewhere in the ballpark of 50 to 75 basis points, then we'll be in the territory of the Fed having over-tightened. And that's when I think a lot of the bigger risks come home to roost.
Okay, and let's hope for not a situation where we have over-tightening. Now, Vishnu, thank you very much for your insights and thanks for coming on the show.
My pleasure as always, Brian. Have a great week ahead.
You too. We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is a central administrator for private retirement schemes. I'm Brian Fernandez. This show will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.